All right, this is James, the Giant Economy. This is your Monday 5:15 oil update. On the last one, we talked about, hey, if we will figure out sometime in May, between mid-May to late May, what's going to happen with oil and everything. And this affects everyone, even for us that buy and invest into it, to those who just fill up at the pump or buy groceries. Man, the oil, energy is in everything. By the way, this is not financial advice. I'm just a guy with blue hair who likes to work or not, just wants to choose his own path, retire early, etc. So this is just me navigating this is me, James, navigating this giant economy that we're in. All right, so this is a chart for oil, light crude futures, CL1 explanation point is the ticker symbol, and it's got in a little bit of a channel here, right? After falling from highs of like 120 last in 2022, in the summer of 2022, right? Here is Gush. This is a twice levered ETF that I like to follow. So if you're looking at the charts, I've got several lines drawn. Some of you are like, what the heck is this? I'm going to explain a little bit of it. So this is what's called a channel, where basically stocks kind of bump back and forth a little bit, up and down. And it is a pattern, right? And every pattern has an ending, a beginning and an ending to it. And as the saying goes, the trend is your friend until the end, right? So this was a pattern of an upscale right here, and it was your friend until the end, and it drops out, right? Things are constantly changing, but so it's good to keep up on it. And again, in trading and in the stock market, everything is a probability. It's a 70-30-ish, 60-40, 80-20 type thing. But we're going to take a look at it. So where is oil at? So here's the pattern that you see, the little channel forming, right? And it's coming off a high. So let's go to our charts. So in any trading chart, you can kind of find a ton of stuff, right? I was looking on it, I was like, which one does this most look like, etc., type thing, and you can find a ton. The hardest thing is to try and interpret these things on what it is, and then you have a probability of it going. So if it's a bearish rising wedge, then you have a probability of it going down, but it can always fly up. Just like look at Tesla stock and stuff like that. That broke all of the normal scenarios, okay? But the one thing that I see in this is a falling wedge. So you see it come down from some lows, it start to bounce type thing, and keep going down. Now, is it as clean as this chart? Do they put the lines on it for you? No, they don't. But you see it come down, and you see it start to bounce up and down within this, right? Some touch the top, some don't. You take the measure from the tops, and you go from there. And again, I'm on the daily here. So what does that mean, right? What does that mean? So what it means is, let's see here, it will fall through here, bumping down to this channel, and then it will break out. And basically the first top is its resistance chart. So in here, I've got these wonderful lines here. This green one at bottom is resistance over a large period of time. So if you see, it kind of comes back to 2021. Okay, that is resistance is basically if you I'm not going to explain it, but that's the resistance. We've got another line of resistance up here, about $80, $81, 82, between $80 and $82, right? If this guy punches up, if this guy punches up through this, then we're going to see resistance at 81-ish dollars, right? And it'll probably do some sideways chop, and then it will punch up again. If this sticks, right, it'll punch up again up to 90. That's a resistance level, right? And crude typically kind of moves fast, both up and down. As you can see, it went from $67 to $80 in a period of 2 weeks-ish, give or take, so 10 actual business days in a sense. So it can punch up pretty fast, and can punch down pretty fast too, and it does do kind of a Richter scale. But here is Gush. This is the one that I follow and trade a bit. You might be able to trade light oil accrual features, but you have to do it through something else. But this is what I trade, and right now it is it is forming a wonderful bottom right here to where this is the resistance. 102 is a big time resistance. I actually bought in at I think 103 or so, and then again, this is on the daily. It is actually up quite a bit. It's up to 108, give or take. So I'm in the green quite a bit. I'm just going to hold it because eventually it should come up, and we'll see if it tests this line. If it breaks it, then it's just going to go up to 129, right? If it hits it, comes back down, it'll test this line again, and it'll keep going until, man, this actually extends to the end of June, so maybe I was wrong with my actual last predicament. But we'll see maybe late May, early June when it's going to pop out one way or the other, right? And I'll be honest, it's the summertime driving, traveling season. It should start to pop out in those, right, in those ranges, in those summer months. I mean, if you look back at the highs here, that was in June, April, May, June type thing. They might do a similar thing, just maybe on a smaller graph. But there are some other factors that are affecting it, and these are just technical charts. They're not telling you the background of what's happening, okay? So let's see if we can go into that. Let's see your trading charts. Okay, so here's Cushing's weekly stocks of crude oil, right? And if you see, it went down, but it kind of came up a little bit. In other words, there's a little bit more supply in Cushing's than there was, last week. So the supply is going up a little bit, but at the same time, the price is going up. Typically, you have a little bit of adverse reactions, and you'll see that in this chart. I'll let you look this up yourself. But the other thing is this: the SPR, the Strategic Petroleum Reserve, is being drained. Okay, let's take a bird's eye view. May 27th of 2022, it was at 526 million barrels. May 5th of 2023, a year minus 2 weeks, it's at 362 million barrels. So in the last year, it's down about 30%, give or take, right? Not necessarily half, but 30%. That's huge because currently the president is putting a few million barrels of crude on the market. Again, that's excess supply, and that's going to push prices down. He can only do that for so long. Let's put it this way: he's only got 362 million barrels left. Okay, if he keeps going the rate he's going, just adding, he's got 2 more years left of this, and that's it, right? He's putting about 2 to 4 million barrels a month on. So if you look at April, let's go back to April 7th, 369. May 5th, wow, he put 7 million barrels on the market. That's crazy. March was kind of a flat month, but these things are. He's putting more barrels back on the market, so that's going to affect prices. Ironically, in April and May, that's when it started, March and everything. Let's take a look back at our charts for crude. Let's see here. March, yeah, went down actually. April went up, so when they started putting more, and then there's a little bit of delay. May kind of went down, and now May is probably going to hover back up. Here's my point with the Strategic Petroleum Reserve. There's only so much he can do, right? But as the president, he is obligated to put it back in. It may be they may kick the can down the road. It may not be during his presidency. We'll see, but sometime they will have to do it, right? And when you add in, let's see the Sunday charts, we're going to go over that real quick. Crude oil is a very oversold price. Nice pin bar. Don't think this chart needs much explanation. Here's her thing of crude. It's oversold, right? So that means people have been selling too much. Typically, people would say this is a good opportunity to buy. If it's overbought, that's when you want to sell, right? Again, buy low, sell high type thing, right? So here's her chart, and she shows under the MACD, it's under 30. Typically, if it's under 30, it's oversold. That means people are selling a lot of it, so the price goes down. And typically, over 70 is overbought. That means people are buying too much of it, right? There's a glut of buying, which makes prices go up. Okay, and this is kind of how we track on charts. So you want to typically you want to sell or buy when it's down low on the MACD and sell when it is high. Natural gas, I'll let you know when you're excited. Yeah, I think everybody in the industry is saying it's gonna be a while, probably at the end of this year type thing. So that is her her little split on crude. Actually, let's hear. There was one more portion of it. Yeah, okay, she did not go through it, but basically she was saying, where did I read that? Yeah, she was basically saying crude is overbought. Excuse me, it was oversold, and so the charts are basically saying that it's going to have a huge explosion to the upside. So, but we shall see. We shall see. But this is why I am pretty much bullish on crude. I think it's going to shoot up sharply. I'm looking at Gush right now. It should break through this, and then it'll hit this one right here, and then if it holds that, it'll break. The next one is this one. Will it have an all-time high again up to here? I don't know. You know, that was when the Russian war happened type thing. But again, it bounced back up to there, and then to there again, even after that. So we shall see. All we know is that there's a powder keg prime for oil right now, and with the SPR being drained, once those barrels stop, with producers in the Middle East and even in Russia pulling back on the amount of barrels that they're going to be selling, and American companies not putting more infrastructure into theirs, we're seeing crude go up in the long term, in the fundamentals. In the short term, we'll see what happens. I'd say stick around, take a look at the charts. End of May, end of June, we should definitely know which way this is going to break. I'm not just willing to bet, I am betting, because I bought some of this, that it's not going to go down, right? If it would have to go down, if it broke down, that means oil would be at about $45 a barrel, right? If it breaks up, depending on where it happens, oil can go up to wrong chart. If it breaks down, oil would probably go to about 45 a barrel. If it breaks up, it'll go into the 90s type thing. So we're hovering on that pin right now. The charts show that there's a better percent chance of it going up. So stay tuned. We will see. Again, not financial advice, paper trading only. Just a guy with blue hair that wants to try and navigate this financial world. And I'm glad you're along for the ride. Like and subscribe. Let me know if what your thoughts on this, what your thoughts on oil is. I know we all like cheaper gas prices at the pump. And so if they're not, at least you can invest in it or put some money into it to make you feel better, all right? My name is James, and I'm signing out.